Thank you very much for coming today for what I think our 7th year, Ross. You thought we've been doing this, so we come every year to give a bit of a report card and an update. We are recording the presentation today, so if you do have a question, please wait till I come to you with the microphone. With that, I'll let Ross take it away.
Okay. Yes, and I want to also thank you all for coming. This is an annual thing for me. It's I sandwiched this between a mining dinner that we had last night, and the Mining Hall of Fame that's tonight. And it's the one day in the year that I actually come to Toronto and tell stories about Equinox. And I've been doing it for 7 years now. We're 7 years old this year. We've been pretty successful at building a really big company from nothing. Lots more to come. But I really am proud and honored of both the job we've done and also the team that has made it all happen. And actually, you're all part of that team in a certain sense. You're all, I mean, a company's success is really built on an ecosystem of employees, of course, senior management, shareholders, accountants, lawyers who help us, engineers, contractors, communities, First Nations supporters. It's a giant ecosystem. We now have nearly 8,000 employees. We're a big company now. This is from nothing 7 years ago. And, I've built these kind of companies because I just love creating wealth for not only shareholders, but communities. And this is something that the mining industry can do really well. It can create value, create wealth that is distributed broadly through society. Not only are we producing products that are important, but we're also creating wealth from the ground that distributes itself into the economy and helps a hell of a lot of people, helps an awful lot of people with good jobs and good opportunities. And the multiplier effect from a single job is, 5 or 6 times. So we are supporting not only our employees and their families, but also big communities. And I'll be talking about that today with not just our Brazilian operations, our Mexican operations, our California operations, but mostly today I'm going to be talking about Geraldton and about the Greenstone mine, because it's our big driver. It's the one thing we focused on for the last 3 years. We're finally hitting our stride. And I am so deeply honored today to have some representatives of our First Nations communities that work with us as partners. Thank you so much for coming here. We also have the Honorable George Pirie, Minister of Mines for Ontario here. Everybody knows George. And I'm again, deeply honored, George, that you take the time to come here. It's actually the 3rd time I've seen you in the last 8 months. One was at our opening at the Greenstone mine in August. And one was in London in December when I was part of the Northern Miner Symposium, and you were there promoting Ontario. And I can tell you truthfully, really, there is no better place on the planet to build a mine than Ontario. I mean that sincerely. And we've demonstrated that with what we've done in the last 3 years. So I can say that honestly. And we also have a group from our mine, from the Greenstone mine, led by David Newhawk, our general manager. And David, would you introduce the others, please, from both the mine and from the communities that are here, please?
Yeah, immediately to my left here is Braden Connor. He's the manager of Environment and Indigenous Affairs. And we have Chief Judy Desmoulins, who's the Long Lake 58 First Nations chief. And Dina Quinville, manager of Community Relations. Peter Razovich, manager of Indigenous Affairs. We have Tim St. Clair, who's the Councillor for the Métis Nation of Ontario.
Thanks. Thank you. So it's really a great honor to have not only all of you here, but also all of you, actually. It's really great. You're part of our ecosystem, investor base and analysts and bankers. And I will happily say I'm actually drinking beer right now because I'm thirsty. I spent all day. Berlin's been working me like a dog. I've been to 6 different investment banking companies doing presentations to the sales desks and some of the analysts, and I'm tired. And I'm like, this is the happy time because I really like doing this. I'm much more relaxed here. I don't have to, kind of answer these really difficult questions. I had a question today. How does the cold weather at Greenstone affect the operation of the high pressure grinding units that we have there? And I'm going, I don't have a clue, but apparently they only affect it in a slight way, right? Please say yes. Yeah. So it's like it's minus 27 today in Geraldton, and things are going just tickety-boo, right? Please say yes. Yes, thank you. Okay, so I'm going to go through a little slideshow here. And what I like doing this one time a year when I actually do this job is I try to do a report card. I try to say, this is what we said we were going to do a year ago, and this is what we've done. And then I'll say, this is what we plan to do in 2025. And I will be back next year to try to explain why we did or didn't perform exactly as we had hoped to. And that's really what I'm really happy about doing today. So I'm going to rattle through some of these slides, and then I'm going to open up to questions. Please just ask any question whatsoever. And if I can't answer it, Rylin will, or Dave will, or I'll get an answer for you. So let's just go straight into this. So just to back up a little bit, this kind of is the slide that shows all of our progress since we started at the very beginning of 2018. We're 7 years old now, but our mission hasn't changed. And our mission has been from the get-go to build a big, like world scale gold mining company to deliver to shareholders the best possible leverage to higher gold prices. So that means you have a large production base, and we've sort of set as an interim target. It used to be our ultimate target. Now it's an interim target, 1 million ounces of gold production a year, which is a number that demonstrates size. It doesn't mean anything particular. It just means scale. We've hit that mark. We're very close to it right now, and we'll get there in the next couple of years, I'm sure. So scale in production and scale in reserves and resources, and the more of those you have, the more you'll benefit from a rise in the gold price. That's called leverage. And so that's our pure focus. And in terms of location, we're focused on the Americas. Why the Americas? We could go to Africa, we could go to Asia, we could stay in Canada, but there's great opportunities in the gold business in Latin America and North America. It's an area that I've worked all my career. I know it very well, and that's going to be where we stick. And so our focus is scale and in the Americas. And in that environment, you can see here, we started out in 2018. We bought a little mine in California called Mesquite. And then in 2019 or 2020, we bought Leagold, which brought us 4 mines in Brazil. We sold one and kept 3, and a big mine in Mexico called Los Filos. 2020, we acquired a company called Premier Gold, which had the Greenstone mine, which at that time was a feasibility stage development project. And then we, of course, scaled up 2021 with all that new production, and we built the Aurizona mine, we built the Castle Mountain mine, and we bought the Santa Luz mine. We built, I should say, while at the same time we spun out 3 small companies to create new companies: Solaris, a copper company in Ecuador, Versamet, a royalty company, and I-80 Gold, which were spinouts. So those first 3 or 4 years, we focused on those other mines that came to us from Leagold, and the Aurizona mine that we built in Brazil, and the Castle Mountain mine that we built in California. And then we got Premier. And so with Premier, we had a pause on production growth while we built the Greenstone mine. Well, it took almost 3 years. We started, I think we basically broke ground in September 2021, and happily, we had our official opening last August. We poured gold in May, had our official opening in August, declared commercial production in October, and we had our best month ever in December. We produced 25,000 ounces just in December. So the scale up of Greenstone is going really well now, and I'll talk more about that in a minute. So that's our first 7 years right there, and that is leading to now. We're going to have quite a ramp up in production in 2025, 2026 as Greenstone reaches its design capacity. So you look forward to a really nice production growth in the next year or two. Okay, so this is a snapshot of where we are today. 7 mines, 3 big expansion projects, 38 million ounces of gold in reserves and resources, delivering production of almost 1 million ounces a year. So that's the leverage we now deliver. We get $100 an ounce change in the gold price, for example, it immediately relates to $100 million in growth, and actually it'll report right to the bottom line. And that's the leverage that we give people now. Production, we just announced our production numbers for 2024 last night, and we are very happy, most happy about the production at Greenstone, 111,000 ounces for the year, but 25 of that was in December alone. And that's for me, it's very gratifying to see that mine is now ramping up at pretty much what we expected to have after a few months of maybe being a little bit more optimistic than we should have been, but now it's doing a great job. And Dave just told me that January is looking pretty good too. Thank you. So then we had our big mine in Mexico, Los Filos, 170,000 ounces. And then Brazil, Aurizona, 71, Fazenda, 62, Santa Luz, 56, RDM, 56, Mesquite in California, 71,000 ounces. And then we had a small operation in Castle Mountain, which is now closed, but we're still having residual leaching, which is giving us some production there. And that's the story of Equinox today. That's the snapshot for 2024, leading into 2025. So here's the report card that we gave a year ago. First thing, of course, was we have to achieve Greenstone production. 90% of our focus for 2024 was Greenstone. It had to be. It's the biggest mine we have. It's the most important mine, the lowest cost mine, the biggest driver of cash flow. That we had to do, and I'm very, very pleased with how we did at Greenstone. A lot of naysayers. I think I complained a little bit about that last year. If you remember, I complained about certain analysts and certain investors and funds saying, "Well, we'll never build that mine on schedule and on budget. Nobody has in Canada in 5 or 10 years, and you're not going to be the first." But we did it, and it was a great testament to everybody involved at the mine, including the community leaders that we have that support us so profoundly. Our First Nations supporters, our town of Geraldton and the people around there, the employees, the staff, the contractors, everybody. Really a great job, and something that obviously we're very happy about. And then in May, we ended up quite fortunately buying the other 40% of Greenstone. We had 60% a year ago. And then we were told by our partner, Orion, that they wanted to sell. And they're a private equity fund. That's what they do. They had it for 5 years, I guess. They invested, $400 or $500 million in the construction phase, or 600 million. It was time to sell, and we said, we want to buy it. We want to buy it. Obviously, we want to buy it. And we ended up they did an auction, and we were the successful bidder, and ended up buying it in May, a week before it opened. So it was a bit risky. We had to hope that the mine was going to perform well. And it cost us almost $1 billion US. So it was a big financing, big effort, right after we'd already kind of stretched a great deal to be able to finance the $750 million US construction costs over the last 2 years. And we were at the limit of our capacity. We'd done all sorts of financial engineering, raised a bunch of equity, put a whole pile of debt against this, done gold prepays, and then we had to pony up $1 billion US to buy the stake. But we did it. We've got a fabulous financial team at Equinox, pulled it off, and now we're extremely happy we did it. So that was a big objective, and we did that in May. Then we have the guidance. We had guidance, and here we kind of fell on our face a little bit. We had a landslide at one of our mines in Brazil in February, I think it was, February or March, which knocked out about 50,000 ounces of annual production, and that hurt us. And then we were kind of optimistic at Greenstone that we'd be able to produce more than we actually did produce. So we were below on that. We actually had to revise our guidance in the middle of the year to reflect those things. So we did that, but then at the end of the year, we hit that revised number. So we can't really say we achieved our guidance of a year ago, but we certainly hit our revised guidance, and that we were happy about. And we only knew that, I only knew that on like January the 2nd, because you never know how these mines are going to go. Like Greenstone was on a fast ramp up, and we were quite anxious that this happened, because if you don't hit your guidance, the market just crushes you. You just get so punished these days. And so we were happy we did. So we did that. And we're going to release our cash costs and all-in sustaining costs in February, along with our 2025 guidance. So, and then of course, you know, we have stressed our balance sheet. We have a lot of debt. We did actually three convertible debentures, raised a bunch of equity and a lot of debt. So we absolutely have to know that Greenstone is going to work sufficiently that we're going to be able to delever, get rid of some of that debt quickly. And so far, this is our big job in 2025, and I'll kind of come back to that. So we did a lot of financial engineering, but we ended the year in pretty good shape, and we are now capable of actually starting to reduce our debt in a significant way. And that's a really critical thing for us for 2025. We also, of course, this is kind of motherhood. You know, if you don't replace your reserves and resources, you ultimately go out of business. So you have to explore a lot, and we achieved that. And then I guess it was 2 days ago, we announced that one of our mines in Brazil, we've extended the life from 2 years to 10 years. Actually, we've extended a lot longer than that. But we still have to figure out a way to expand the mine and do all that technical work that allows us to ramp up production. The Fazenda mine in Brazil has turned out to be a real winner for us. It's been probably our best mine in Brazil, and we were very happy to announce that we were able to extend the mine life. It's obviously, it goes right to the bottom line, and it goes to the value of the company, and that's an announcement we made on Tuesday this week, and it was very well received in the market yesterday. So that was good. And then the big thing in terms of the growth and where we're going, and I'll talk more about this, is we have these big expansion projects. Obviously, Greenstone is one, Arizona is one, Castle Mountain is one, and Los Filos is one. And at the end of the day, you know, this is the only chart that really counts, is how good is our share price performing. In 2024, it was not that great. All of these things, you know, had nervousness. There was discounts for Greenstone startup. Is it going to go well? Is it going to operate on schedule? Is it going to open up on schedule, on budget? All these things were nervous for investors, and I think that's one of the reasons I feel we were quite discounted during the year. And then as the year went on, we kept having to layer on new financing, which was never well received by the market. We had to do it to buy the Orion stake, mind you, but we still had to do all of those things. And at the end of the day, we actually performed okay, but I thought we would perform better. But I'm very optimistic that in 2025 is going to be a great year for us. So that's 2024. It's behind us now. So far this week's been pretty good for the stock, and I hope this kind of trend continues for the rest of the year. Why did we buy Orion? I mean, these are the metrics that are the reason we actually bought it. Obviously, it increases our gold production by about 156,000 ounces a year. It decreases our total costs a lot because it's our lowest cost mine. Increases our cash flow by about $250 million. It increases our EBITDA, I should say. And of course, it's a tier 1 mine in a tier 1 jurisdiction. The best place to build a mine in the world. And it's a big mine, one of Canada's biggest mines. So it's an obvious thing to do. If you have 60% of a great mine, it's way better to have 100%. And that's what it's done. And it's also created for us, it's solidified us as one of Canada's largest gold producers. This is how Greenstone ranks against the other Canadian mines. It's basically the 4th largest Canadian gold mine, and it's one of the highest grade, the 2nd highest grade mine in Canada. So it's a big, big mine, and also on a world scale, one of the lowest cost mines in the world. Obviously, that means that the margins between today's gold price and the operating costs at Greenstone it's going to be a very profitable mine for us, allowing us to pay back the debt we incurred to build it and generate some pretty substantial cash flow for our shareholders. This is what it looks like at a full scale, 390,000 ounces a year, 15-year mine life with about a 8 million ounce reserve and resource base. I feel there's lots of potential here in exploration to add to mine life here by multiple years, maybe a long time through underground expansion and other open pit opportunities, both in the immediate area and along the trend that goes between Geraldton and Brooks Bank and other areas towards the east-west Greenstone belt that Greenstone is part of. And I take my hat off to the whole team. Dave is the leader of the team, but all the people we have that have built this mine so well, and allow it to run so well. It's been really, for me, very gratifying. Okay, so that was 2024. What are we going to do this year? And what am I going to step up here next year and be able to say we've done or we've not done? Obviously, the first thing is to get Greenstone up to design capacity. We're close to that now. We still have lots and lots of work to do to tweak things and repair, issues or clean up things that we should have done, or maybe just we valves blow and hoses leak and the usual sort of stuff that happens in a startup. But we've got to get it up to design capacity, and we are sort of targeting mid-year for that. We're, I'd say, close to that, but we still have to get there. And there's lots of small things to do that Dave's team are leading, and we expect to get there mid-year. Right, Dave? Say yes. Please say yes. and then we have Filos. It's a Mexican mine that is actually our biggest gold producer right now, but it's marginally profitable. And the reason for that is that we have a cost structure which is impacted by community agreements we have with the local indigenous communities and non-indigenous communities in the area in Guerrero State. These agreements have come about after 15 years of historic mining there with bigger companies like Goldcorp and Teck and Leogold, where the mine was extremely profitable. It was a rich surface gold mine, heap leach gold mine, and they were giving these really generous land payments and contract commitments to these 3 local communities, which made it was kind of like a win-win at the time. But now it's a much higher cost mine. We're going deeper. The mine metallurgy is changing to a higher copper content, and it's just very hard for us to make money in the traditional open pit heap leach mine that has been the standard for the 15 years at Los Filos. We have to build a new plant, and the new plant's going to cost us $300 or $400 million. And the plant will increase recoveries. It'll mean we waste less gold, but we cannot sustain the historic agreements that our predecessors entered into with the local communities and make money. We just can't do that. So we have told them, and I mentioned this a year ago for anybody who was here, that we are going to have a kind of a come to Jesus with the communities this year to try to revise the agreements along the line of neighboring agreements like Torex, for example. It's a big mine right next door that pays their communities about 1/3 what we do, and other mines in Mexico that pay their communities about 1/10 what we do. We're not going to 1/10, but we'd like to get closer to what Torex pays, and also improve a whole bunch of other contractual clauses that really limit our ability to operate profitably. So right now, I had hoped we've been negotiating with these communities for months. I had hoped we'd be able to say we're done. We're going to run that. We're going to build that new expansion. We're going to, build another 120,000 ounce or 110,000 ounce production base, lifting capacity to 280,000 ounces with a 15-year mine life, and be done and operate with wealth generation to the communities, even larger than they're making right now. But we can't say that. We're still not done. It's very frustrating, and it may be that by the end of March, we actually have to put the mine on care and maintenance until we reach a proper agreement. So that's the one mine that is in the report card for 2025, because really we absolutely have to get those agreements done, or unfortunately shut the mine down, which isn't going to help anybody at all, right? It's a lose-lose. So it's very unlikely we'll get to that point, but I absolutely want to make clear we cannot commit to that happening until we I would say we're fairly close, but we're not there yet. So that's a report card target for 2025, and then once we do that, of course, advanced engineering, advanced work that gets us to that expansion for a long life, low cost operation, the way we have at Greenstone, for example. In Brazil, in northern Brazil, we have the Aurizona mine, and that is an expansion project through an underground add to the open pit mine we have right now. It's really, to me, it's a very low risk, sleeves off our vest kind of thing. We've explored the underground with hundreds and hundreds of holes. They've all hit. We've got this beautiful sheet of mineralization. We just have to get underground and bring mineralization up from underground to balance open pit mineralization. So that's something we're going to advance this year by driving a tunnel underground and getting right into the ore body and starting to look at it and doing more drilling and so on. So that's a very advanced project for us that'll happen in 2025. And then, of course, Castle Mountain, which is this deposit that we've had since we began in California. It's a large, low-grade gold deposit that we've been permitting. First couple of years where we were doing feasibility work and looking for water, which we found and which we've completed. And then we went into permitting, which in California is not a trivial thing. It's not a walk in the park like Ontario. You know, it's a, it's California. And on federally owned land, Bureau of Land Management land, you've got to do a lot of things. So we've done a lot of things. We've done all the environmental work, all the engineering work, lay down. We own the land. It's a historic mine, but we figure we've got about 2 more years to permit. We're active in this. We're so far so good. There's no issues with anybody, but we've got to go through the hoops. So we figure about 2 more years, and so in 2026, I hope I come here and say we're almost there. We've got like a year left, and then we can actually go and build the mine. So that'll add at 220,000 ounces to our production base. Low cost again, long life. These are the kind of mines that you want to own for any company. Finally, the big story for 2025 is paying down our debt, taking the cash flow from Greenstone and the other mines we have and paying down our debt. And we're going to be actively doing that. That's going to be the #1 use of our free cash flow, to get rid of some of that debt and de-lever, improve our ratios, and make us a much stronger balance sheet. And then, of course, finally, exploration, of course, adding to reserves and resources. That's motherhood. So that's the report card, and that's the plan for 2025. And I'm confident we'll get there. So Greenstone, this is our expansion. You could say Greenstone is pretty much behind us now. Thank you. Aurizona will be a low-risk advancement of an expansion project there. Castle Mountain, I just talked about. Los Filos, I mentioned. This is the only one that I'm really, I can't commit to. It's just inconceivable that they would require us to close the mine because we can't be profitable in an environment where they're going to benefit so much from a longer-term mine life. So that's the status quo there. Today, we're really at an inflection point. We've worked very hard for 3 years, spent a ton of money. We're getting now to the point we're going to see some of that come back. And these are analyst consensus numbers. Our numbers will come out at the end of February. We'll deliver guidance for 2025, late February, along with our Q4 production numbers and our annual, all of our annual numbers. But that's a pretty nice chart. That inflection point is on a happy trend. And the other thing it's done is it's increased our Canadian content. We are now about 50% of our net asset value is in Canada, about a quarter in Brazil, and then a quarter between the U.S. and Canada, and U.S. and Mexico. And that's really important right now in today's investment climate, when investors want, quality even over quantity. They want quality, and Canada is one of those real go-to countries. You can see the success of Agnico Eagle, all Canada, almost all Canada. Alamos Gold, almost all Canada. And that's kind of a position we'd like to be in as well. And we'll get there with Greenstone maturing this year. And our plan, of course, is to use that cash flow to reduce our debt. This is an example of, you talk about an inflection point. This is our EBIT, this is our earnings before income tax, or interest, tax, and depreciation, and amortization, whatever, EBITDA. EBITDA, that's the term. That's basically the cash flow from operations. We had a big year this year. Part of that was Greenstone, but look at these 2 years here, around $1 billion a year. That's going to do good things to our leverage ratios and drop it down to something that is non-worrisome, put it that way. Anything over 2 is something we want to eliminate as quickly as we can, and we're doing that now. We paid $180 million. We took $180 million off our total debt in Q4 alone, just this last quarter. This is, at the end of the day, the same slide I've shown for the last couple of years, and it's still sort of irritating to me that we're still shown on the left as a very discounted gold stock. price to net asset value when we should be closer to the New Gold, Oceana Gold, IM Gold. Those are all kind of peer companies. At the same time, we have bigger reserves, bigger production, and better growth than any of them. So I guess although we've been discounted for all the reasons I mentioned, I really think with the success of Greenstone and quite frankly, what we're doing in Brazil and California and some resolution in Mexico, this year is going to be the year that we see that discount leaving us or being eliminated, and it's going to return. We're going to return to a much better valuation, the kind that these other companies have. So I really expect that to happen in 2025. And this is the big reason why you go for scale, because all these big companies have better multiples. And this, of course, is where we want to end up as soon as we can. Could be 2025 or 2026 or 2027, but that's at the end of the day, why you go big, because you get better multiples, better diversity, better liquidity, better risk minimization when you have multiple mines in multiple jurisdictions. You're just a safer, better company, a stronger company, better balance sheet. All of that comes with scale. And that's why we're driving for scale. Obviously, none of this can happen without really strong commitment to things like safety, communities, employees, being a good company and protecting the environment to the extent we can. We put a lot of time and a lot of money into this stuff. We deliver this. We have this amazing ESG report, Environment, Social Governance report, every year. It's a beautiful report. It's online. If anybody wants to look at what we're doing on community relations, health and safety, environment, it's all there. It's incredible what we do. And one of the best and most cool things we did last year was we wanted to celebrate Greenstone. We wanted to celebrate this big mine that we bought, we built with a great team, both in Ontario and in British Columbia. So we had this crazy idea, let's organize a bicycle relay across Canada from Vancouver to Greenstone and time it with the opening of the mine in late August. And so Berlin, thank you, spent 6 months of her life organizing this and rode the whole way. And we pulled it off. We had something like 50 riders and support vehicles. And the last day we rode into the mine with RCMP escort. My heart was literally bursting, just the pride of having pulled this off. We did it as a fundraiser for the Geraldton Hospital, and we raised $1.3 million for the hospital, which was for them the biggest, by far, biggest donation to support the hospital they'd ever had. And that hospital supports thousands and thousands of people in the area. It supports all the different communities, Indigenous communities, Geraldton community, people in all of our employees and contractors. And I just, it could have been a difficult thing. We might have had an accident or who knows, but it went smoothly, 3,600 kilometers across Canada, big ribbon cutting ceremony with all the community there. And then the following day we had the official opening and you were there. And it was just great. It was great, wasn't it? Yeah. It was great. I was a cyclist in the beginning and the ending. I didn't do all the stuff in the middle, but it took 3 weeks. And we also had little events at all the different mines we have in support of the Greenstone opening. And they supported, Alzheimer's research and stuff like that at all the mines in Brazil and in Mexico and in California. So that was a really neat thing to do. And we love that. So we're also very aligned with shareholders. I think you know that I'm a very big shareholder. I've got a good chunk of value here, about 7% of the company. And this is quite unusual in the gold space. One other company has more, but I think we're quite proud of having, and it's not just me, it's our whole management team. They're all invested. Some of them have significant portions of the net worth in shares of the company, and that's great. They're really aligned with investors. Okay, a few words on the gold price. I was quite bullish a year ago. Anybody here might remember that. Gold performed pretty much as I expected. Actually, it performed better than I expected. I was bullish on $2,200. It went to 28, right? And then it kind of came down a bit. Now it's heading back up again. And why was this? Well, it's due to non-normal reasons. It's due to like a lot of the conventional gold investors would have said, well, gold's not going to go up in 2024. You have the ending of the easing cycle. You have higher treasury yields. You have a strong dollar. Those are all negative for gold. So gold's going to go down. That's one of the reasons the gold equities were in the tank. They didn't buy gold equities, but they were wrong. They didn't realize that in Asia, people are trying to shift away from the dollar into other forms of financial assets like gold. And so China went crazy, bought 700 tons of gold last year, but also Kazakhstan, Poland, Turkey, India. You know, the list is 10 or 15 countries long that bought a lot of gold for the central bank assets as an alternative asset. And that's what gold's good for. That is why gold is a financial asset, a long-term store of value. But also retail investors bought gold. Huge amounts of gold were bought in China, in India. And this is why gold prices went up. At the same time, you had the usual kind of global turmoil. We all know about the turmoil in the world, that some people buy gold as a store of value, protecting them from chaos. And the gold supply was almost flat, right? And when you have a flat supply and an increase in demand, you're going to have a higher price. It's basic economics. So it's a combination of supply and demand. Despite all these factors, I just thought it was a really bullish reaction to the price, and that's what happened, of course, to the price. Now, how does it look for 2025? Why is it going to change? You know, I could talk endlessly about why I think gold is going to keep doing well. Luckily, I've got a lot of good company. All the analysts in the business are equally positive. Now, of course, that's a contrarian's dream, but I think there's good reasons why gold should go up. It's a little turbulent this year because of Trump. You know, he's a bit of a unhinged kind of a guy, and but almost no matter what he does, I can make a good case for gold being strong. Almost no matter what he does, gold goes up. I mean, the dollar gets stronger. Dollar was strong this year. Gold went up. Dollar gets weaker. Traditionally, gold goes up when the dollar's weak. Treasury yields go up. They went up this year. Gold went up too. Yields go down. It always does well when yields go down. So inflation goes up. You know, you can make all kinds of cases, but at the end of the day, as long as central banks are trying to move off dollars as a notional financial asset into something else like gold, and there's not a lot of things that they can do that with, gold's going to have a great year. November numbers, December numbers, Chinese are back buying. It's a positive outlook, and that's why I'd say most people would say gold's going to trend around where it is right now, or maybe even through 3,000, and that's going to be great for Equinox, really great. At the same time, there's not a lot of interest in buying gold stocks. You know, it's very unusual. I've been in this business not 50 yet. I've been in this business for actually for almost 40 years, for 39 years in the public company space. And, you know, it's traditionally been that gold and gold equities trade in tandem. Now it's out of sync. There's this disconnect. I really thought it was going to clean up in 2024 because I thought as gold hits sort of some magic price, generalist investors are going to say, well, you get the leverage with gold stocks, not with gold as a metal, not buying an ETF in gold. You buy the gold stocks. That's where the beta is. That's where the volatility is. And actually, that did happen last year. So in between February and October, gold was up 20%, where the larger gold producers in the GDX were up 52%, and the smaller companies were up 58%. That's positive leverage. Unfortunately, the gold price went down a couple $100 after October, and you had the reverse. You had, you know, worse performance of the equities. On balance, they still didn't do that well. You still see this disconnect here. But I really feel that's going to end, and it may end in 2025. It has been a correlation for my entire career, and beyond that, you can go back to 1950, and you have that correlation, and it's out of sync. So typically markets revert to mean. I don't think gold is going to go down, so I think the equities should go up. Again, it's when these generalist funds come back into the gold space. You know, the market is different today. I admit it's different. You've got all these ETFs. I call that dumb money. People just buying an ETF without regard to the quality of companies. or all these funds that buy on momentum and on algorithms that again don't have regard to company fundamentals. We saw that yesterday, I think. You know, we had this announcement about a Brazil mine increasing reserves, but it's actually a small mine. It's only maybe 2 or 3% of our net asset value, but our stock went up 10%. You know, it's not logical, but it's today's market, and that's a new force, I'd say. But despite all of that, I think fundamentals always assert themselves at the end of the day. Cream floats to the top, and that's, I think, why we're going to have a great year this year. That's why, as I said, what's going to drive value for us this year are the traditional things: revenue going up, gold prices going up, costs coming down, production growing, all of these kind of motherhood things, getting rid of our debt, that'll go directly to equity value. And we're doing all of that this year. So I really expect if gold is flat or down, we're still going to do well. We'll probably outperform. But if gold goes up, we'll do really well. It's going to be a really great year, and I really hope I can come back here next year and have delivered all of that. So this is the last slide. It's just a summary slide. 2024 was a transformative year. 2025, I'm really looking forward to. I thank all of you for your support in one way or another, and for being part of our family. It's really great, and I'll see you again next year. Now, I do have endless time here for questions, so really, anybody has questions, I'm more than happy to answer them.
Wayne Lamb with TD. If I think back to last year, the things that I guess stood out for me that we talked about first was the Greenstone consolidation, which you guys successfully delivered, and the second was at Los Filos, where you'd said maybe by mid-year last year, we were hoping to get a deal done, or else things would kind of come to a head. So it certainly seems like you guys have given yourselves and the communities enough time to try to make a deal work. Just wondering if you might be able to give us a bit more detail on what's going on there in getting to a what seems like a final decision by end of March here, and then just curious in terms of the positioning, where it seems like without a deal, you guys can't operate economically there. At the same time, if you do get a deal done in the near term, Equinox might not be in a financial position to be able to build the CIL plant. So just curious what your thoughts there, and a little bit more detail on the situation.
Sure. The last side of not being able to finance any growth, forget that. We'll have this won't happen in 2025, maybe not even 2026, but by the time it happens, we'll be able to finance it. Don't worry. We're going to have a dramatically improved balance sheet and ability to build something like Los Filos. Yeah. So I guess I would say this: once you've lived within an agreement that you've negotiated with lots of stress and noise and blockades and stuff like that, the way those communities had for 15 years, it's very hard to go back to a worse deal if you're a community. It really is. They all thought, wow, this is great. We're getting all this money. We're making 10 times what the average community is making in Mexico, and, good for us. So they don't look at the side of the company particularly, but all of our numbers are public. So they read every one of our news releases, every one of our financial statements, and they can see quite clearly we're producing gold for $2,200 an ounce. And it was only in what, in June that gold shot through, or May or whenever it was, that gold shot through 2,200. So a year ago, we weren't making money at all, and we're hardly making any money today. So we just have to do this, and they now realize that. So it took them quite a while to understand that we were serious about this. We noted, and all of this is public, by the way. I'm not saying anything out of school. All of the stuff's disclosed. We terminated our union contracts, which required advance notice. In the fall, we have terminated all these 3 community agreements formally. The key one expires at the end of March, and they actually know we're serious now. We've had a very clear line in the sand. We've delivered a very good agreement that would work anywhere else in Mexico, and actually the same kind of agreement that works at Torex right next door. And the mayor wants it. The secretary of mines for the state of Guerrero wants it. The union leaders want it, right up to the top. Senator Napoleon Gomez in Mexico City. They've all supported us. 2 of the communities are virtually there. and the one is kind of a holdout. That's the one we're most actively negotiating with, and we're hoping we get to a deal. But it's very much a sense of, they're just, we're just bluffing, we're kidding, we're not going to shut the mine down, and we absolutely have to do that. So to show them we're serious. Once we get to a deal, that will open up, this whole Los Filos 2.0. We'll redo the engineering, redo the capital costs, and at some point when we're happy with our deleveraging ratio from Greenstone, we'll do that expansion. It's a great ore body. It's a world-class ore body. I think we have 25 million ounces in reserves and resources. And all of this stuff as we go down is getting higher grade. But we can't run it through a heap leach. And that's, did I answer your question? Yeah. Yes. Oh, sorry. Oh, second here.
Hi, Mike Park, National Bank. Obviously gold's doing well, but maybe something we didn't discuss is, could you give a comment on your exposure to currencies, which have certainly weakened?
Sure.
A nice tailwind for you going into 2025.
Yeah, question about currency. So we're very, very happy because we operate in Canada. Canadian dollars are getting crushed, for better or for worse, but the US dollar is very strong against the Canadian dollar. That helps us, of course, and our operating costs, because they're all in dollars and our revenues in US dollars. Brazil, real is getting crushed as well. I'm not sure exactly why, but it's hitting record lows, and that's helping us with our labor costs and our reagent costs in Brazil. The Mexican peso is kind of doing okay. I haven't actually looked at what it's doing. I think we assumed in our budget 18 to 1, and it's, what is it, 21 now? Anybody know? Anyway, it's good. So thank you for that question, because it's great. Now, if the US dollar weakens, I think while against, say, Canada or Brazil, it might be negative to those costs, it should also improve the gold price. So I kind of think it's going to help us both ways. But right now, it's very much a tailwind. It's helping our cost structure exactly when we need it. And I don't know. I'm not much of a crystal ball gazer with respect to the dollar, but I can see it strengthening with Trump, with all this noise about tariffs, and for a while, and then it'll just get destroyed eventually, because the U.S. economy I think will falter, and that'll hurt the dollar. Okay, yes.
Brad Dunkley from Wartalk Capital. Just to follow up with the possible closure of that mine, the 3 communities, can you give me some context for how much money are they actually getting, and how meaningful is it to them as a percentage of, I don't know how you look at it, but yeah, is it something that they definitely cannot, like, they need this?
Yeah, no, it's vital to them. It's vital.
Any sense of numbers you can put?
It's not just the numbers. There's I think, but it's much more than that. It's contracting, it's employment, it's timing of payments, it's tax treatment of payments. There's a whole bunch of things that are hurtful to the miner-like operation of Los Filos that impede an efficient operation that we would normally have in Canada, in America, in other places in Mexico. I've worked in Mexico for 37 years operating mines, and I can tell you they're lovely people. I just love being in Mexico. It's a great country. This is the only time we've ever had these kind of problems, and it's purely due to the history of the other companies like Goldcorp that just caved in because they were making so much money from the Los Filos heap leach, and the result is terrible agreements that we've had to inherit. And now that costs have gone up, we have to have a recognition of that by the communities. And like I said, 2 are fine, and it's the one that we have to tackle. I'm still very hopeful, but I take your point of I was hopeful to the middle of the year, and we certainly didn't get there. Well, more importantly, it's long term. It's going to establish a long term basis for their children to operate, and that mine has an endowment of it could be going for literally decades, and that's what we all hope for. So you can't you really are hurting the golden goose, the goose that lays the golden egg. And interestingly enough, I guess I've always been, I've always been, oh, we can't possibly have a closure because it's going to be a terrible thing for shareholders. But actually, that is one of our highest. That's our highest cost mine. And like Kerry mentioned this morning at one of our meetings, he said, you know, maybe investors are going to love it because you're going to get rid of your highest cost production, and the rest of your productions, the average cost is going to go down, and it may well be seen as a yoke that's removed from your neck. So I don't want to proceed to that point. I really like that mine. I like the people there and everything else, but you know, this is a current situation. I'm just being honest about it, and like I said, none of this is stuff we haven't disclosed to the market. Yeah. Yes, Anita.
This question might actually not be for you, but for the minister. So as we talk about CAD tailwinds, the reciprocal is any thoughts on any kind of early planning on what would happen with the Trump tariffs in terms of retaliatory tariffs that might impact mine inputs?
Do you want to answer that, Minister?
I think actually that the federal government has announced a list of commodities that where tariffs would be applied against the U.S. I know our premier has announced, we'll be talking more about this on Monday, but the AMCAN fortress North American policy, that's all built around a strong trade relationship between Canada and the U.S. And you heard Trump talk about we don't need the Canada's agricultural produce or Canada's forest products. We don't want the automobiles, but he never mentioned critical minerals. That's why he's talking about Greenland, because he knows we've got the critical minerals in Northern Ontario that he requires. And quite frankly, we're the partner that he needs. So yeah, that's the response that we're focusing on. The list of commodities that he's talking, or that the federal government is talking about, I don't think would impact on the negatively on the production that you have in Mexico.
Sort of more along the lines of, you know, during the pandemic, right? Getting supply chain was a major issue. So, you know, if they can't get the steel from Canada to make whatever all, or, you know, truck, and then you're having a problem with stuff.
You know, it's so ridiculous to think of this sort of dramatic hostile action. The repercussions are so, you know, we're so interconnected, Canada and the U.S.
It's going to take them some time to figure that out. So
it's just nuts. I mean, there's lots of nutty things that administration's, you know, talking about, and how much comes to pass, who knows? Who knows?
And then on a more positive note, can you just talk about the sort of give us a little bit more color on the what you've been working through in the last quarter at Greenstone, just in terms of sort of the throughput and
Dave.
And it's a little nitty gritty.
Come on up. I'm gonna second the master himself, our mine manager, our general manager.
Hi, Anita. Let's think from the investor, the presentation or in the tour up there in September. Talked about, obviously the key driver was stability of the operation in the mill, right? So it's really, as we've gotten more stable in September and October, of course, there's a few things that we realized that was impacting the online time, right? We talked about at the time there in September it was the extremely high wear rates of the screens, for example, right? The secondary crusher screens, the wet screens in the mill. So we've replaced all those sort of panels, and we've just, it's been night and day in terms of that. That's some of the big drivers. Is it's easy to look at the things over a long term, right? And looking at it from a Pareto chart to seeing what drives the outages, and the more things that you solve, then obviously it becomes more stable, right? And so that's the continuous improvement.
Thank you very much, Dave. You have so much more credibility than I do, so appreciate you answering that question.
If I could ask,
I'm a geologist. I'm a dumb geologist. Yes.
Greenstone, what's the planned maintenance schedule for, call it, the first half of 25?
Planned maintenance schedule, it's really from a mill shutdown perspective, right? In the mine, it never shuts down. It runs 24/7, right? We have 6 loading units, so it's an ongoing process, right? So there's always 4 or 5 loading units in operation. In the mill, it's we're basically running, every month or a little bit further than more than a month. Say, call it around 6 weeks. We have an outage of 1 or 2 days, give it that sort of thing in terms of repairs. On the crushing side, we have a stockpile that compensates. So, a shutdown doesn't mean a loss of production. And in the middle, it's a function of just like what I talked about in terms of maintaining the equipment, right? And so it's in that sort of time frame every 6 weeks for a short period of time.
Are we good? Is there one more?
And then just on guidance, obviously the Los Filos decision doesn't come until March 31st. Your guidance comes out February, call it 20th.
Right.
So how are you going to approach guidance?
Base case is we're going to assume a shutdown. Yeah, we have to do that. It's a conservative way to do it. Do we have any more questions? Yeah, one more. Go ahead.
More of a big picture one. So 1 million ounces solidly in your sights. Big gold assets are getting more scarce and more difficult to mine. Is there an ideal size? Is 1 million ounces it, or is there a next tier? How do you think about that?
Yeah, well, I think of quality rather than quantity. Now, we went for Greenstone because it was a much better mine than anything we had. We got all those early mines because they were cheap. They were cheap because they were tier 2 mines. They were short lives, relatively small production, but we wanted to bulk up and do that growth that came out of the gate, which actually once you build an income statement like that, you're able to finance more and you're able to get things like Premier, which we acquired, and we're able to finance, 60% of Greenstone. And then we were able to buy it out as we continued to grow. So obviously if we do anything new, I shouldn't say if we do anything new, anything we did, if we did, would be higher quality, the way Greenstone was when we had all the other mines. Much, much lower cost, bigger, fit in well, Canada. I mean, it was just a perfect asset. We were very lucky to get it. It just was right time in the right place. Those opportunities are rare. Companies that have those assets are very rare. Normally mines don't sell at all if they're good mines. Newmont just sold a few assets that were non-core at pretty good prices. And, that happens now and then, but it's pretty unusual. So I'm not going to say we're going to do anything, but you never know. Something might come by that looks pretty good. And if it's better quality and fits in well with everything else we're doing, we might look at it. But it's easy to say that and it's hard to do it. I think we're just about done, but, I'm not going anywhere. So if you guys have to run, go ahead. But
thank you, Ross. I'm David Horton from Global Mining Research. You're clearly a growth-oriented company. You've gone through a cash spend phase. You're now into a cash generative phase. You've spoken about retirement of debt. What are your thoughts about dividends to shareholders in future?
Yeah, dividends are always in my brain as a big shareholder. And it's all about capital allocation. So dividend is a form of return of capital to shareholders. So is stock buybacks, and so is paying debt. So right now, the almost exclusive focus on cash flow is going to be getting our debt leverage ratios down. And unfortunately, we have this line of credit, and we have like 9% interest rate. And that's something we want to get rid of. So as soon as we can, we want to knock that out, even if it's just replacing it with a corporate bond of lower interest coupon. So that's a priority.
So
that's
reading between the lines there, maybe not this year, but perhaps next year for a dividend?
Oh, for a dividend. I don't want to promise anything, but we should be able to kick out a dividend relatively soon, and of course, then you have the dilemma of, well, is it a symbolic dividend or is it a real dividend? And we certainly aren't at a position right now where we can say it's going to be anything material, but a notional dividend, I think we could do almost any time, but I don't think we have it in our plan certainly for this year. Yeah. Nice question though. To me, once you start paying a dividend, you've hit the sustainable cash generating safe and you've converted into a different kind of company. You've moved in. So it's obviously the sooner the better. Yeah.
Good evening, everybody. Chief Judy Desmolin, Longley 58 First Nation. I'm one of the Indigenous communities that is truly seeing the benefits of the Greenstone gold mine and the partners who are all involved. And I just couldn't pass this opportunity since there's a minister in the room. But I've repeated, I've said some of these words at the grand opening that we had in August, at the grand opening of the mine there. And, you know, being a First Nation in such a wonderful country as ours, you know, and our communities forced to live in basically third world kinds of situations. But, you know, with the mine, it has brought new life to us. And, you know, I just want to thank the this industry and the way it has come forward and included us right from the beginning. You know, we're not in the situation we're in because we're lazy or because we don't know how. We were just never given the opportunity. So I want to give a huge thanks to Equinox and GGM and all those that were involved for involving us in this whole process in the beginning. And for the minister, you know, this is a real good model for the way things need to go ahead with other industries and especially in mining, because, you know, the wealth needs to be shared in order for us to continue to get access to a better life here in our own country. So miigwech.
Thank you. Thank you very much. I just am so proud to hear those words from you. I really appreciate it. Thank you. Anything else?
Any other questions? All right. Thank you very much, everybody, for coming. Thank you, Rob.
Thank you. Thank you. Thank you. See you next year.